Hello everyone, welcome back to our new weekly market recap.
A lot happened in the past week, but nothing really. Expectations to cut the interest rate has been raised. And guess which asset gets affected for a start? And you guessed it right, it's gold. So as we can see, technically we had gold consolidating. So we needed a factor to push it either ways. And interest rate exactly was why gold started going up. Now, technically, we had an impulsive movement making gold reaching to the resistance on a higher time frame, or on a daily time frame, rather say. However, as it is impulsive, we technically should see a retracement. It could be to this support because demand started from here, the impulsive move, or actually it could go further down to liquidate these lows. And if we find it going to here, this could be a very, very attractive entry, although for long term. Of course, if we get confirmation that it should follow up to the upside. But we have our interest rate decision to come on the 10th of December. All the signs are showing so. From there, we might actually see, because of that, if we don't get some fundamental reason for gold to retrace, or if we get some fundamental reason for it to be bullish, we could see easily this high to be broken above. So don't take it for granted. Trading gold, actually, past week, there was a lot of manipulation by midweek. Think about Wednesday. We had a lot of manipulation then. And afterwards, Thursday and Friday, we had markets moving very nicely. Thursday markets were very nice. Friday markets, we had some, I don't know, global freeze for some whatever it is. All right, so that's about gold. It is very bullish. So what you want to see is you want to see some confirmation for you to go long. You don't want to short it. And it is at resistance right now. So entering now is not an ideal move. So what you want to see is some sort of retracement, either a short retracement or a deep retracement. There is a little possibility that we might see a shallow retracement. I'm going to change the color here, right? Of course, all of what that is to be considered by what's going to happen by market opening. So technically, it should retrace. Fundamentally, people are more relying on bigger expectations for the interest rates to be cut by first third of December. That's about gold. Let's go into Nasdaq. Looking at Nasdaq, we highlighted in the previous week that we should be seeing some sort of consolidation. And that was because the fundamentals and technicals are going opposite to each other. But guess what? Since technicals were long or were bullish on Nasdaq, we had enough reasons, which is the expectations on the interest rate cut, to push Nasdaq to the upside. And if you take a look technically on a smaller time frame, we had actually multiple good entries throughout the week. This was liquidation also. And yeah, we had multiple good entries for a day trade or 2-3 days holding on Nasdaq in the previous week. So for now, we can see that there's strong bullish momentum. Market has moved above this resistance. We can expect a retracement before we can aim for a long entry targeting the support on, the resistance on the 4-hour time frames to the daily time frame. That's about Nasdaq. You ultimately want a retracement before an entry for long. Notice all of these analysis, whether it's on gold or Nasdaq, this is very crucial to understand. If something fundamentally comes to be bearish upon these assets by this week, and this is very likely, right? They might just put in some reason to push the markets down for them to have a better entry, or basically for markets to breathe in and out as it should. So that will be it. Keep a follow up with news. Yes, I'm a technical guy, but I'm telling you, for next week, you want to follow up news, especially because the interest rate cut is to come shortly. So that's about Nasdaq. Let's go into Nifty 50. Nifty 50 seems to be in love with its bull run, and we can see huge demand has increased even when it reached to its all-time highest once again. So what we're seeing here, this pattern, we could either see some falling wedge or a possible, and this is very possible, for a break above all-time highs before markets try to liquidate this. Why I'm saying this is because we do have actually technically multiple reasons why there's high possibility for Nifty to just not skyrocket, actually just break above its all-time highest in the upcoming week. However, what you want to see is a retracement. You could actually go for a breakout trade if you have a good breakout strategy. If not, then come and learn one from us. We do have multiple people who are very good with breakout strategies. Not me though, I like safe entries. That's why I'm telling you. What you want to see ultimately, either market retracing, right, to the trend line, or if it continues, if it pumps up, right, we would want a retracement to the support before we can go for a long entry again. And sky is the limit until we get if it breaks up, until we get a confirmation that this movement has passed its time, then yeah, you want to keep that on. Follow risk management, and breakout strategies, they tell you to compel to risk management. It doesn't mean that there is no resistance, that the price will go to the moon. It practically can't, but it is what it is. That's about Nifty 50. Let's go into EURUSD. So what we're looking at EURUSD, as we had highlighted and anticipated in the previous week, market did move to the inner resistance. Interest rate cut expectations means possibly a weaker dollar, hence the euro, boom, boom. And from here also, we did have good reasons to enter for a short retracement, another good entry, and same as it is here. So there are actually multiple bullish confirmations why EURUSD is more likely to just break above this trend line, and we can possibly see a long-term bullish trend coming on EURUSD, right? So if you're gonna enter from here, and technically we do have all confirmations, keep in mind in risk management, or be very crucial about, because it's gonna be a breakout trade. Otherwise, if we get a retracement to the support, right, a possible liquidation for these lows also would be very, very good for a long entry, right? That's about EURUSD. Let's go into Bitcoin. Looking at Bitcoin, also as we've anticipated in the previous week, the collapse or the bearish movement, call it as you wish, continued moving forward to the downside. Here we had multiple reasons why markets, or why Bitcoin is actually turning into a retracement movement. So it should retrace now to the resistance level. This is what we're looking now on Bitcoin, creating for us a healthy downtrend movement. So from here, there is actually a possibility for it to break up or down. We'll see once the time comes. But this retracement is very possible because the expectation for the interest rate cut, it's not just for those who haven't learned from us, or for those who doesn't have deep information or understanding of how market functions. Interest rate cuts are one of the biggest factors to control the whole economy, right? So it reflects on everything. That's why only expectations are enough to change market dynamics, trends, and favors. So what we are talking about here, Bitcoin especially gets affected twice rather than once compared to EURUSD or Nasdaq or gold when it comes to interest rate cuts. Because once they cut interest rates, first thing we have is the dollar becomes weaker if they cut it compared to the Bitcoin. Also, you need dollars to buy crypto, right? So the damage, or the effect rather say, by weakening dollar will be doubled compared to Bitcoin when the interest rate cuts goes to real life, if it does. So that's about Bitcoin. And if it confirms, if it gets confirmed by 10th, you'll also see Bitcoin bazooking up, if that's a word, like a bazooka, like skyrocket. Yeah, we're trying to be a little bit fantasizing words about markets. So that's about Bitcoin and technicals.
Thank you for watching. Stay tuned for next week.